Joining us now, CAZ Investments, she's going to kill me, Investments Chairman and CEO Christopher Zook and Investor Place Executive Editor Jeff Reeves. They're both with us here to get us to the closing bell on Wall Street, and we will be making fun of neither one of their heights. However, let's talk about this market a little bit, and as you said to Lori, maybe it's tomorrow, maybe it's not, but, start us off, Jeff, bigger picture as we head into next year. How optimistic or pessimistic are you? What's your 2017 outlook early on?
I mean, I think it's going to be choppy, but I'm overall pretty optimistic. I think a lot of the kind of softness, if you will, we've seen in the last 2 weeks is just it's kind of the end of the year. I think people want to book out their winners. A lot of zeros on the Dow is just a big psychological threshold of resistance. So I don't think you should read into it any more than that. But I do think that, as everybody has said, this kind of idea of reflation and pro-growth policies, people are getting behind that. And, Charlie kind of talked about the hopes of the 10-year getting to 4. I don't think that's ever going to happen. We've only seen a modest rate increase. So stocks are still it. They're still it.
Christopher, what do you think? I mean, what Jeff's talking about, a lot of people have been kind of bringing us that point of view, but there are other risks out there. Do you buy in more to the risk side of it and maybe some more pessimism that we've come too far too fast? Or?
Well, I'll put it this way. We're very bearish right now, and we think the market is going to pull back significantly in the first quarter, this first half of next year. Okay. Valuations are very expensive, and we absolutely have good potential news in front of us. But when you look at the actual news we have, not much has changed yet. So we expect there may actually be a buy the rumor, sell the news, and we are very short here.
Is there something, get back to you in a second, Jeff, is there something, Christopher, that has happened just since the election that we've come so far, or have you been thinking this way for a longer period of time?
I mean, it's really more of a reaction to where valuations are, particularly in certain pockets. Small caps, as an example, right now are trading at 1.7 times the S&P from an earnings perspective, and you don't even include in that the companies that are losing money in the Russell 2000 calculation. So if you add those back, actually we're a lot more expensive, almost 2 times enterprise value to EBIT. So it's something to where the market's very expensive, and we have really no room, no margin for error at all before we see some downside pressure. And with everybody more or less bullish right now, when somebody does start to the exits, it's going to be a stampede like we saw in January, February of this year.
So, Jeff, pick up on that theme that Christopher's making this argument on valuation. What's your counter if you have one?
Well, 2 points. Number one, we did see a correction in Q1 of 2015, but that didn't stop us from having a pretty decent calendar year. And number two is the valuation argument has kind of been made all across the last 3 years or so. I don't want to dismiss that, but I would say, again, to the idea where you're going to put your money, I mean, we did see a 25 basis point rate increase from the Feds. We're at real low levels historically. It's just not attractive to go out and put your money in fixed income assets.
Well, let's ask Christopher real quick at the time we have left. What's the alternative then to stocks in the United States? Where else do you go? Where are you going?
Right now, cash is absolutely a good place to be. It doesn't pay you very much, but it doesn't lose you anything. And more importantly, those that have cash, when the market does correct, will be able to take advantage of what are very attractive values and potentially an improving economy as we move forward. So that would be a great time to have some cash.
Could have missed this whole thing, though, right? If you were in the cash for this, for the last couple of months, were you?
Yeah, it's one of those things like anything else. Investors should be at the lowest level of equity exposure that they're comfortable with right now. They should have more cash. And absolutely, I'd rather miss out on opportunity cost than lose my money. So I'm going to be defensive here and take advantage of the chaos when the chaos does occur.
All right, quick thought from you, Jeff. A closing one at that as we get ready for the closing bell here on allocation. Which direction are you moving? Real quick, Jeff.
Markets go higher long term. I'm still long stocks. I think everybody should be long stocks.
All right.